It is future season. It's time to look ahead to the future. And so we got our master teacher taking things next level. That's really came down from the investing, trading mountaintop to be able to take things to the next level, because this information that you need to hear, make sure that you are looking into this before you start your investing cycle. You're investing strong, because again, remember, we don't do nothing weak over here. I am your host, Michael Afwani X. Make sure y'all like, share, and subscribe. Get this video to over 1,100 likes, because we need y'all to maybe make sure that you are creating that community. This is our lovepreneurship community. This is our get your mind right community. This is our focus on the bag community. This is our opportunity to change your lifetime, change your lifestyle, change your lifetime too, for real. Based on just knowing things ahead and positioning yourself in the right with the right size and knowing exactly what it is that you are doing. And so what we're doing today is talking about futures. And so before you start futures, you want to make sure that you have experience in options. Futures has a little bit bigger lot size and things of that nature. Our brother's going to break down. But ultimately, you want to make sure that you are ahead. My brother already started us off with the futures calculator. Make sure y'all tap into that futurescalculator.com. And without further ado, let's hear from our master teacher.
Yeah, how you doing, man? IQ Heavy Consulting Strategies in the building. So as we transition from options into futures, we want to make sure we understand risk management. That's the key to it. Because the futures market is a hypothetical order, the same way we do with options. However, the amount that you trade with is different. So for a contract on futures, it's going to be 500 per, and you can go with minis, which is about 250. But that is the bare minimum that you'd be able to spend on futures contracts. Now you could go lower on different type of contracts. So for example, you got the e-minis and then you got the micros. So obviously micro being smaller, so you get the ability to go a little bit lower on the prices, but then the gains are a little smaller. So based off of the brokerage accounts we have, so normally you deal with Robin. Matter of fact, actually Robinhood just got futures. So you could use Robinhood for futures as well because they're offering a platform as well. So I would actually recommend using Robinhood because they'll give you the easiest platform to learn how to trade futures as opposed to all the other platforms. They expect you to already know how to trade futures. So they won't really give you too much of a tutorial or a walkthrough, but Robinhood will because they don't want them to they don't want their users to lose money. They want you to actually make some money while they make money. So you got funded accounts you can do as well. These we call them prop firms. So you can use your own money, but then you also have the ability to use other people's money, OPM, other people's money. It's key to investing. So even if you can get a loan, it's not actually making money. A loan is actually not income. So if you can get a loan, you can take that money and put it into the prop firms. Because at the end of the day, you're using other people's money to make other people's money make money for you. So that's the double paradox to that. You also got Top Step. That's a platform. If you're writing that down, and you got Apex Trader. Also, that's a platform. And these platforms are low cost. You got Rhythmic too. That's pretty good to use as well. A lot of people don't know about Rhythmic, but these prop accounts they pay you at the end of your basically your evaluation. So you have evals. So you go through each evaluation, and at the end of the evaluation, provided you've done everything correct, you've traded the correct way, you get a payout. So at that point, it's just executing proper trades to get you to a point that you make money using other people's money with less risk. So say you pay $125, they'll give you access to about $25,000. Now I know you might be like, "Whoa, 25,000." Well, it's not all yours; it's their money still. However, what you use and make money off of does become yours. So if you take that 25,000 and you make money, they'll give you the ability to have a payout at the end of the week for using their money to make money. And the way that they make money is off of the split with you. So when you make money, they make money. So it's a pretty simple situation for everybody. They don't mind you using the money because they know if you make money, they're going to make money. However, there are rules. So if you're losing money, they are not going to allow you to lose all of their money. So at any point you're losing more than a certain percentage, they will automatically take you out of the trade. You will lose the whole account, well, called blown account at that point. I know a lot of people have blown a lot of accounts, maybe hundreds of them. So it's very easy to blow an account. It's actually not as easy to get a payout. So you do have to be consistent. Once you find out how you make your payout, you stick with that strategy so that way you have the ability to keep reproducing it. Um,
So that's good information. Can't keep cooking on them. I don't know if you left that gas stove on, man. Make sure you check it. You over there cooking.
yeah, I would say make sure we're doing bare minimums as opposed to like coming in looking to go straight into it heavy. So we want to look at the SPY, S&P 500. When you're looking at futures, you want to look at the Nasdaq. These are the major markets. You can look at the Dow and the Russell and stuff like that as well. But the two major markets you want to play with in this is the SPY and the Nasdaq because they move pretty good throughout the day on a daily basis. So each point is worth 50. So for every point you see on the ES move up or down, that point is worth $50. So you might hear a person say, "I'm up 3 points." The 3 points is a buck 50. That depends on how many contracts they got too. But the 3 points might be in 2 seconds. So I might have a futures contract, got a $500 one, playing it for the futures. I'm saying it's going to go up. The market opens at 620, like the share price. Right now we're around like 620 something. So the market opens up, say it ticks up. As it ticks up, those are considered to be points. So each point for me is a quick $50. So it might go up a quick 10 points and everybody's making a quick couple of dollars and you in and out of there. So that's why people play futures because futures gives you the ability to snipe. So you can ride the bracket, you can get in. Like options, you kind of got to wait for it to kind of play out because it's in your favor using intrinsic value as well as volatility against you because it eats your contract up called theta decay. However, here you don't have that decay because you playing it based off of future. So you're saying, I expect this price to be at this price by this time. As long as that does occur, your futures contract will be in the money. But at the same time, you can get out way earlier, making way more money. Same concept with it, actually, to some extent, with an option, because you don't have to hold an option all the way to the end of expiration. You can jump out early, provided you're in profit. Let's say you bought a leap on Tesla and go up 40%. Do you hold it? No, I would explain you would sell it and rebuy, get a dip because what are the odds is gonna like you went 40% on a leap. So at that point, you take your profits, you reinvest, re-strategize to figure out an entry point, and then you'll make that move for the next year. So that way you still have the perpetual move rolling over. So it's kind of the same thing with futures. Once you get into it and you understand the direction, you stick to the direction, set a target. Most people usually go give or take the NAS usually run about and the SPYs run about 50 points. So on average. So if you got on average running 50 points, remember every point is $50. That's why people play futures because the futures market is typically going to run you 50 points up or down. And most times we've run 100 to recently with Trump in office, we've ran 200 points at a time. So understand that's how much money has been being moved around in the market. That we're to a point that the futures market is moving 200 points at a time. We've come down quite a bit, but we've done that volatility under Trump. So that means that we have the same expectations to keep having all this volatility using the futures market. So it's a great market to be in right now. The best market to be in right now, to be honest.
Nice, bro. Nice, bro. Now that was a masterclass, man. That's better than what y'all would get on TikTok. Make sure y'all like, share, and subscribe. If my bro just dropped information that you needed, because I know definitely got some stuff that I already needed right there. Especially when talking about futures, because that was kind of a question that was popping up, or at least in mine, is it how it relates to options, and you kind of answered or made that distinction. But let's make that distinction a little bit more or clear for the people out there. You know what I mean? So just so I'm overstanding, it is similar to option, except that the data isn't decaying the contract itself. Like at least
Correct. And it's more liquid. So it's the most liquid market, meaning it's the most market, it's the biggest market you can use to cash out your equity. So if you're in the futures market, you'll always be able to get out. In a contract, you might not always be able to get out because somebody has to be a buyer.
Understand. So I guess when we say you don't have to worry about theta, let's say it's at the 2,500th point, that would pretty much mean that even if it's at that point, it stays at that point, you wouldn't lose any value once
No,
it's there. So, but
no,
unless it goes a particular direction, that
correct.
value and based on
The
the
the points
direction,
establish your ability to lose or gain value. So as
overstand,
it moves up or down, it has to make a move, and it will make a move.
overstand. I like that. I like that. That makes it clear. That makes it clear. And so then, I guess it sounds like another way to make money. You know what I mean? And so, what's the difference between? I guess for somebody who is just hearing options, just hearing stocks, just hearing futures. I guess would is the incentive to get into futures the one you just said, 50 points, it being more liquid. In fact, that it doesn't trade on time decay,
Yeah,
and
futures is your end all be all. Futures is end game. So as you climb up the ladder, you would start with stocks. Then you might maybe dabble with crypto. You might look into dividends. Then you might touch options. One might even touch forex first. When you get to futures, you'll understand futures is the end. Futures is where every it's an accumulation of assimilation of everything that you brought together. So futures will give you the ability to have the one trick pony. So if you learn futures before you learned all the other ones, you still need to learn the other ones. However, you wouldn't need to learn too much because it's just a switching of the tooling. Like you're using the same tools basically to do something different. So with futures, it's its own market, and then you got your indices, and you got your currencies, and then you got your energies. So like or your equities, I should say. So each of these situations yield different amounts of money based off of different capital groups for different people. So in the futures market, it's liquid because it's the global economy. And
mm,
the options market is not as liquid because it's privately traded companies. So there, at any given point, a balance sheet could say it had a certain amount of money that it didn't have. They could say they had a certain amount of shares that they didn't have. So there could be manipulation inside of that market. So things can be not what they seem. And with stocks, you're holding something that gives you equity into a company over time. So when you want to invest, investing is actually buying stocks. When you want to make money, making money is buying options. When you want to make a shitload of money, that is futures. Because at
mm,
that point, you figure it out how you move in options. Because if you do great in options, then there's no reason to not move over to futures because futures is going to yield you a way higher return doing the same thing you're doing. So you might have made 300 on this
yeah,
contract, but if you knew that that was going to move in that direction and you played the futures, you might have had to come out your pocket with a couple more dollars. But that's the incentive. More money begets more money. So if you put up 500, you might pull back 5,000. If you put up 300, you might pull back 800. The difference is you were in a different market with the 500 versus the 300 because the 300 it's not allowed to be in the 500 market. So you would have had to come with a couple more dollars to risk to be able to get more gain.
no, that's clear, bro. That's clear, bro. That's definitely where I'm seeing it is really being able to recognize. You got to be able to recognize liquidity sweeps. You know, and
Correct.
and their ability to at least how much that plays into what we're seeing in the market. That's definitely been
Yeah,
what
time plays a big factor into it. So about 7 o'clock, I got liquidity. 9 o'clock, I get liquidity. About 10, get liquidity. 10:30, liquidity 11:30, 11:40, 11:30 to 11:45 liquidity, 12 to 1, 3 to 4. All times that will give you times to be in between the liquidity moving. So with those markets, it's a liquid market. So it's like currency. Think of it like a river in a bank when they tell you how money flows, get in between the currency. So you want to get wet. So in this situation, if we know that the market opens technically around 7 and we have movement right at that moment, you want to set your remember futures. This is the end all be all. 24/7. This market doesn't stop. Options stops. Stocks stop.
mm,
Crypto doesn't stop. Futures don't stop. Futures is an equivalent to crypto. So in this situation, you can play it all the time. So when you figure out something, you can go, all right, this is the time. I'm jumping at this time. I'm gonna set it for here. I'm looking at this bracket. I'm only looking to make 3 or 4 points. Boom, in and out like a sniper. quick 250 for the day, and you turn that into your hobby. And as you get the money, 250 for the day, 250 for the day, you'll build up. Now you can do 550 for the day. I do 1,000 for the day. You'll build up to a point where your risk reward will be maybe I'm willing to lose 300 if it doesn't go my way, but I'll make 1,000 if it does go my way. So you put yourself in a perpetual cycle of winning. So even if you lose, as long as your P and L, I might lose Monday and Tuesday, but I won Wednesday, Thursday, Friday. So at the end of the week, I'm gonna be profitable. So that's really all it is. Don't focus on the day, focus on the week because it'll get you to a point that you can make sure you're profitable. If you can execute in the same style of trade with the same amount of money, with the same frequency, you'll notice a pattern. Once you notice the pattern, you'll pick up a trend. Once you pick up a trend, trend is your friend.
That's big, bro. That's big, bro. And yeah, man, drop a like, share, and subscribe, man. If my bro just really dropped the knowledge right there, because that's a lot of stuff we're seeing. Is wisdom to be able to know the different ways that we can take our money game to the next level, man. Because there's so many things that you can learn in this investment journey. And I don't know if y'all started your investment journey, but let this video be an impetus for you to get out there, because I'm telling you, there are so many options, and no pun intended. But the better thing to say is to right is to look into the futures. You dig? Look into the future, because if you look into the future, it'll make you a wise man. And so I definitely am seeing that's what, at least the study has been calling. I've been seeing the futures just keep popping up, keeps popping up, keeps popping up as the realm. And so you definitely did a great job of breaking it down. And so I think this is a good. I think actually no, we're good at 15 minutes. We'll do 3 minutes running, because I was gonna ask you a long question. I was gonna ask you what's the theory of money. We're gonna do that for our next one, because I think
Yeah,
that was a good
it's
one.
good. Let me leave him with some I guess some dictionary shit. So micro equals M for many. ES is full. YM is full. RTY is full. NQ is full. When I'm saying full, meaning these are full size contracts you gotta pay 500 for. The MESs are the micros, the MYMs are the micros, the M2Ks are the micros, the MMQs are the micros. The E-minis is the obviously the minis, and this is for the yen, and this is also because you use currencies as well. So you got the other micros, the mini three for oil contracts, because you could, like I said, you could just play industries or indices, sorry, where you like oil. We know right now they were just going through a war. The moment you heard the word war, you would go to the futures market because you know damn well oil is going to spike. This is just how it works. So I hear that. I go to the futures market. I set up at 7. I'm waiting for a spike. I'm going to catch a crazy spike, and I ain't greedy. Make the money, you get in, you get out. You hear as we about to go into summertime, July 1st coming. Guess what people do July 1st? As long as there ain't no war. The moment they say war is not all going to happen, guess what? I know everybody's traveling. I'm looking at booking.com, looking at all the indices that allow travel. So air flight. At that point, I'm doing futures for for the airplanes. Is it really quick thoughts? Because every time that the industry tells you something, there's an investment that you can make, even if it's on the bad side. So if you hear war, you know oil. If you hear no war, you know maybe people are traveling because it's summertime. If people are traveling, how are they getting there? Airfare. It still plays oil because you still need oil to get where you're going. So it's still a double-edged sword for oil. So you can always figure out when you oil is going to spike because the economy will shift. So going into the winter months, we're going to use a lot more oil. So you could kind of play futures coming in, understanding, all right, I could jump in right here and play it to right here and jump out. It's just using a lot of information. And if you plug it into your chat GPT, you shouldn't have no problem. Because even if you say, well, I don't understand what an e-mini is or what I gave you all of the tools because you have the chat GPTs and these other large language models. So you just put that in there and it's going to tell you exactly what it is, how to do it. You can ask it, what's the best way for me to optimize my ability to have the highest probability of success using these e-mini contracts versus using these using these full contracts. And I work 9 to 5 based off of my working strategy, what will give me the best optimal time to be able to be in the market to capitalize on gains at these times. It knows all this data, all that information is already in it. So all you have to do is plug and play, plug and play.
Amen, bro. Amen, bro. Amen, man. Man, make sure y'all like, share, and subscribe, man. Make sure y'all take y'all trading journey to the next level, investment journey. We on futures now. We in the future with futures, and so continue to make sure that you do your build. Make sure that you continue to ask questions, continually try new things. Don't be afraid, because the real risk is not trying. You feel me? The real risk is staying in the same place. The real risk is trading your time for your money. When your
That's a
money
fact.
can make you
You want,
money. And not only the money can make you money, but the OPM, you can use other people's money. You feel me? So it just makes even far more sense to figure this thing out. So we appreciate good bros like Brother Ivan for being able to break down this complicated information, because we say the sense of the test of genius is being able to make complex information simple. So we appreciate our genius brother. No pun intended. Genius brands, genius acts coming through. You know what I'm talking about? So we're
that's
making
what's
sure
up.
we profiting off truths and all recognition, being able to recognize the patterns in the matrix. You did. Anything you want to leave
Yeah.
them on with, brother?
Nah, man, it was a good outro, man. IQ heavy out. On the next one, we're gonna have some more information to go down the rabbit hole a little deeper on the contracts. I can even show you how to set up the contracts, how to get into the contracts, how to execute the contracts.
Amen, bro. Amen. Appreciate the build, man. Keep it going. Let's keep it going. Have a great day, my G.
You too, man. Stay good.
Amen.